Hello everyone, welcome to iExamB. Today we are going to discuss in this session about finance, NABARD finance vacancies and what were the previous year questions. Last year किस तरीके के questions आए हैं 2020 में from the finance stream. We will discuss all the questions that came, whether objective or descriptive. So finance stream, you know that the prelims paper is the same. There is no change in the prelims paper for any of the streams. So all the different streams, the prelims will be the same, right? Which will include your 5 qualifying subjects of quant, reasoning, English, computer awareness, decision making, and then there will be merit based subjects of GA, ESI and ARD. Right, so this will be your prelims paper that all of the people irrespective of the streams have to do. However, the cutoff for different streams is different, right? So if I talk about finance, the cutoff last year was only 16.75 out of total 100 marks merit subjects of GA, ESI and ARD for the finance stream, right? Another important point to note, for finance stream this year there are 30 vacancies, which is more than the vacancies last year that had come. There were 21 vacancies. So this is also an increase in the number of vacancies this year. Okay, and your finance knowledge or your finance questions, they come in the mains part in phase 2, in which your paper 2, this paper 2 is your stream specific. So this is the finance paper that I am going to discuss in this session today. This consisted of objective questions, 30 questions of 50 marks. So how the breakup happens for these 30 questions is that there are 10 questions of 1 mark each, and then there are 20 questions of 2 marks each, 40 marks. So that is how you get a total of 50 marks. And then in the descriptive part, you get 6 questions, 3 of 15 marks and 3 of 10 marks. However, you have to attempt 2 questions out of these of 15 marks, and here 2 questions of 10 marks, which again adds up to 50 marks. So this is how your exam happens, and I will be discussing both of these 30 questions, both of these parts, objective 30 questions and the 6 questions that came last year in 2021. Okay, so let's start. Keep giving your answers, also keep participating. This will also check how much you understand and how much you have to prepare for this year's exam, right? So this will be very, very helpful in that sense. It will be a a reality check where you stand today and how much you will have to go ahead. Okay, so 1 marker objective questions, if I talk about, the first one was a very, very simple question about margin of safety, and that to the formula they had asked which one is correct, whether option A, actual sales minus break-even sales, B, budgeted sales minus actual sales, or actual sales minus budgeted sales, or break-even sales minus actual sales, or none of the above. So which one is the correct way to calculate the margin of safety? Okay, so the correct answer here is A, the actual sales minus the break-even sales. So margin of safety basically tells that how much you need to have above your break-even sales to become profitable, and what is the safety or the buffer you have with you. So break-even sales is that level where there is no profit and no loss, right? So it is the point at which you are breaking even. That means you are covering your all kinds of costs, right? So any sales above that is actually making you profitable, and that difference is known as the margin of safety. So a very conceptual and a very simple question that they had asked. Second question was, they had given a definition and you had to tell which type of a cost is this, right? So which of the following represent the potential benefit an individual or an investor or a business misses out when we are choosing from one alternative to the other, right? So if we have 2-3 alternatives and if we are choosing one of them and letting go of the other, then what is that cost known as? Again, this is a very simple question that had been asked, and when we are studying the concepts of business and the concept of costing and managerial decision making, this is something that is we learn. So this is known as opportunity cost. Why opportunity cost? Because letting go of one opportunity for the other is known as the opportunity cost that one is undertaking. Okay, the third question or the next question was asking about the branch of economics that involves the application of economic methods in managerial decision making process. Okay, so we are when the management has to take various decisions, and in taking those decisions they are applying economic concepts, say economic concepts of, say for example, demand and supply, right? We are talking about demand and supply. So in that case, in the demand and supply aspect, if we are understanding the elasticity of demand and using that concept to take some managerial decision, then that branch of study or branch of economics is what it is known as, right? So again, a very simple answer. All the words were actually there in your options that were given, and the correct answer is D here, managerial economics. Okay, moving to the next question, the fourth question. In this question, they had asked, this was not really a numerical, very simple, again, conceptual question related to your net working capital, right? So, if we understand this question, the net working capital of a company, if we need to calculate, basically this is given by your current assets minus your current liabilities. The difference between is known as the net working capital. Now we have been told that our current assets are less than our current liabilities by 5,000. So in that case, what will our net working capital be? So if this is the only information that has been given to us, now this is not directly a numerical also, right? So whatever the difference, if it is a simple check of whether we know what net working capital is and how it is calculated, right? So if we know that the current assets minus it is current liabilities, and we are saying our current assets here in this case are less than my current liabilities, that then in that case my answer will be negative. It will be negative, right? And the difference and the amount by which they differ is already given to me as 5,000, right? So there is no other calculation I need to do. Only difference I had to understand was whether it will be plus or it will be minus. Here it will be minus, because if we understand it is current assets minus current liabilities, and my current assets in this question are less, then I will have a negative working capital. Okay, so the correct answer here is B, which is negative 5,000 rupees. Next question relates to understanding of one of the costs and where do they fall. So commission which is given on each unit of sales will fall under which type of cost? So when the company is making its trading account and the cost sheet, there are various different costs and various headings of cost. There are administrative costs, there are operating costs, there are selling costs, there are factory costs, there are manufacturing costs, there is prime costs. There are very terminologies that are used, and we have to tell that the commission, that the sales commission that we are giving, where will it fall? So very simple. Again, we are giving this under sales. Okay, so when we are giving commission on sales, which is a part of promoting the sales figure, so in that case it is related to your selling cost. So answer was there in the question itself. B is the correct answer, the selling cost. Here the prime cost they had asked, and how it is calculated. So what all elements are included when we are calculating the prime cost? This is a concept in costing. When we are trying to make the cost sheet, various costs are written down, and then we have something called prime cost, we have works costs, right? So all these different cost terminologies are mentioned there. So what all is included in the prime cost? So prime cost is also known as the direct cost, okay, which is directly associated with the manufacturing of the product or the service that is being provided by that company. Okay, so prime cost is basically all the kind of direct costs which are associated with the production, they are included. So answer is E, your material related cost, okay, whatever materials are used, whatever direct labor is used in the production process, and any other direct expenses, for example, say the freight you may have to give for getting the material, right? So that becomes a direct expense, and that will also be included here in your direct expenses, and therefore will be a part of your direct prime cost. Okay, moving to the next question. It will be great if you all keep participating also and keep giving your answers. It will help you to check and what you know, and if you are understanding, and in case in any of the questions do you not understand any terminology, you may also write in the chat to understand that. Okay, so moving to the next question here. The seventh question, any accidental loss to your goods or the consigned goods that you are providing, which is caused by any carelessness, this will be which type of loss that we will call in the process costing. So a lot of questions had actually come from the costing, or this is also an overall part of the management accounting part, right? So there were good number of questions that came from this aspect, and the correct answer here is B, abnormal loss, because this is not any accidental loss or any loss because which is not happening in the normal course of the business. Say for example, if there is a theft, okay, or there is a fire in the building because of which loss has happened, or there's an earthquake or a calamity that happens because of which losses take place. So anything that is not happening as a normal wear and tear, or as a part of the production loss that is happening, that is termed as abnormal loss. Another conceptual question related to depreciation that came last year. Depreciation is charged on which type of expenditure or receipt, and it is charged because of which accounting principle? So these were two elements that were asked in the same question. So depreciation is, it's a cost. It is not a cash cost. That means it is more of an book entry to depict the kind of usage of any of your fixed assets, right? So fixed assets are like your, say, plant or machinery, okay, or the building, okay, in which the if you own the building, if the company owns the building, right? So there is normal wear and tear that keeps happening. You need to do certain, value depreciates, the value reduction in that particular asset happens because of usage, right? Because it's becoming old, because it will it is being used, and also because the new technologies will keep coming with the upgradations, right? So there is depreciation. So the reduction in the value, that is known as depreciation. So it is charged on your capital expenditure, right? So capital expenditure means expenditure that has been done for the long term, right? So that those expenditures basically are kind of the expenditures that you do on your fixed assets, right? So this is one. The second aspect is, it is because of which accounting principle, right? Now because if we know even the first answer here, because of these options we will be able to find B as the correct answer, because capital expenditure is only one in only one of the options, right? But if there were two options of capital expenditure and different accounting principles or concepts were mentioned, then which principle is here? It is the matching principle. What matching principle actually means is that in a particular year, when we are making the accounts, the revenue that we are accounting for, the similar type of what matches in earning those revenue we need to do the expenditure, we need to account for those expenditures only. Now because this plant and machinery would have helped us in earning the revenue, so the expenditure related to that particular year only. So whatever the useful life of the plant is, we are going to use that plant for say many years. Say for example, if we are going to use that plant for 10 years, okay, so we are not going the year in year 1, if we bought the plant in year 1 for say 1 crore rupees, then we are not going to show the expenditure 1 crore in our profit and loss account. That will be incorrect. Why? Because I am not going to take benefit of this expenditure in year 1 itself, but I will be taking the benefit of this in 10 years. So in year 2 also I will get some benefit, in year 2, 3 also, year 4 also, till this I will get the benefit till a lot of years, till year 10, right? So I will break this cost down and take only that part which belongs to that year. So that is the concept of matching principle, and this is why we do depreciation in, we try to spread it out over the entire useful life of the project. So yes, Manpreet, that is absolutely correct. PSP, that is absolutely correct. Moving to the next question. This was a question related to the eligibility or the qualification of an auditor to be able to audit any firm, right? So to be qualified to be able to audit, one of the disqualifications that are mentioned for an auditor is that he cannot audit a firm if he himself or herself or any of his relative, they are indebted to the company up to a certain or above a certain amount. Okay, if that is the case, then you cannot audit. Why is that? This rule comes in because in that case you will not be independent. Independent means that you will, there's a relationship that you have with the company and you want in the interest of the company, and therefore you may not be able to have an unprejudiced or an unbiased kind of a position to be able to audit in a fair and nice manner, right? Because you would want the company to be in a good shape and all. So that's why we are saying that you are not independent, you will not be able to do an independent judgment, and therefore you should not be an auditor for that company. So there's a limit, okay, that has been mentioned. There's an above which you should not be indebted to the company. Okay, so that, what is that amount, and these rules are given under the Companies Act. So this correct answer is C, 5 lakh, right? Similar kind of a rule, so this is related to debt, this limit, right? Similar is also mentioned in case of equity. If you have equity investment, okay, so up to what above what amount, right? In that case, if you have equity or if you have given guarantee for a loan, in both these cases, the limit is 1 lakh. In case of indebtedness, it is 5 lakh. Okay. So PSP, yes, that is also correct. Last question of 1 mark that came last year was related to a merger where they had given a definition and asked which type of a merger is this. So what is a merger of two companies called, where one is a financially sick or distressed business and that is being merged with a good or sound company as a part of financial rehabilitation under the supervision of a financial body, right? So in order to save a weak, financially weak or distressed business, we are merging it with a more stronger or a better off business in the same industry as a part to save the weak company. And then what do we call this kind of a merger? So there are various types of merger also. Okay, so PSP, no, this is not a hostile merger. This is an arranged merger. It is called an arranged merger. So you may say, the banks, the PSU banks mergers that are happening, sorry, that have happened in the past and may happen in future. But last time when we brought down the PSU banks to 12 banks, and PNB, there was a lot of banks in which banks were merged, right? So those were kind of an arranged merger. Okay, so Parmesh and PSP, no, it is not a hostile merger or a takeover. Hostile takeover is when one company is trying to take you over the other, and the one who is being taken over does not want to be taken over, but you are doing in all possibilities, so it is not friendly. The person who is being taken over does not want to be taken over, right? That is what is hostile takeover. Okay, friendly merger is when both the parties agree themselves and find mutual consent and benefits to merge. That is a friendly merger. The opposite of that is hostile takeover. Okay, and negotiated merger is again when both two parties want to merge, but before merging they come at a common ground that they can benefit each other, so that becomes a negotiated merger. Okay, uh, let's move to the next question. And before I move to the next question, I would like to tell you about iExamB courses and iExamB guidance that that always focuses on unfolding your own potential to come out to your best ability. We provide a lot of free resources and guidance to all the kind of students who want to prepare in different aspects on their own. If you are preparing on your own, you will find previous year questions, you will find free mock tests to practice on our website. You will find Bpedia, which is our daily GA publication, free of cost from on our website, and on a YouTube channel you will find a lot of engaging sessions and fruitful sessions that keep coming across courses. If you want if you want guidance in understanding where you should put your energies, because many a times you don't understand where to put your energies or what are your strength areas and what are your weak areas, we help you to unfold your potential by guiding you in a focused manner so that you prepare 50% faster. You study what is relevant, you study with a focused mind, after cutting out all the unnecessary or the clutter that is available around you, so that you put in your best in a focused manner at the right points and at the right material to increase your efficiency, right? So that is what iExamB courses are designed to achieve for you, right? So moving ahead with the 2-marker questions. So I have discussed 10 questions till now, and the 2-marker questions, they are of there are 20 questions that come, and these questions are mostly passage based. There's a passage that is given which defines a particular theme, and based around that you have to answer 3 or 4 questions that follow. So there were 2 numericals that came last year, and four questions. So in one they had given you a balance sheet, and based on that you had to calculate 4 ratios. So this was one of the questions. There were 4 questions of different ratios which you had to calculate. There was current ratio, quick ratio, debt equity ratio, and proprietary ratio that you had to calculate based on the information of this particular balance sheet, right? So if we talk about each of them one by one, say the current ratio. The current ratio, of course there were options that were given. This was in an MCQ format, but here for the ease so that you are able to see the data also, I have written it on one slide only. So in the current ratio, the current ratio is calculated as your current assets divided by your current liabilities. Now we need to, from this data, calculate the current assets and then the current liabilities. So current assets will include your stock. Basically this is your inventory, or also called stock in the balance sheet. So this becomes your current assets, this becomes your current assets, debtors or receivables. Your short term, because these investments are short term, they will also be current assets, and your cash in hand is your current assets. So all these 4 clubbed together form your current assets, which is 12, 12, 4 and 12, this will give you 40,000, right? Similarly, we need to calculate our current liabilities. Now, current liabilities are all of those that have to be repaid in up to 1 year, right? So, what all will it include? You may mention here. So, it will include, your current liabilities will include all of these, your creditors, which are basically the people from whom you might have taken. They are your suppliers. The bank overdraft, because this is also short term in nature. Your tax related, whether this year's or future, because they have not been paid, they are your current liabilities. So these three together, these three items together, they make up for your current liabilities, right? So if we add 16 and for 20, 24 and 28, so 28,000 is your current liability. So this will give you around 1.43. So this was your answer for the first question. Your second question was your quick ratio. Now, quick ratio is basically all your current assets except your inventory or stock, whichever it is you may refer, and then your current liability. So here basically from your 40,000, your current assets, you reduce your stock of 12,000, or the other way is that you add debtors, investments and cash in hand and not the stock, right? So this way you will get how much? You will get 1:1, because this will be 28,000 divided by 28,000, which will give you 1 time, right? So your quick ratio was 1 time. Okay, now then is your debt equity ratio. Your debt equity ratio is basically all your outside liabilities which have an interest bearing and fixed interest bearing. So it mostly refers to long term. In some cases, even short-term loans are included. However, bank overdraft we can exclude, because that is for the time duration that you are taking, when you are utilizing more than the credit limit that you have. Okay, so in that case, bank overdraft here is not taken, but you will take into account your long-term debt, and your long-term debt here is 8% debentures. So we will take that debt and we will divide it by equity. Here equity represents your shareholder funds. So your shareholder funds basically include your equity share capital, your capital reserves and your surplus profit and loss account. Okay, so that will be your shareholders fund. Okay, so basically here then we have 32,000 divided by, if I add my equity, 40,000 plus 8,000, 48,000 plus 12,000, 60,000. Okay, so here my answer will be somewhere around half, which is 0.53 times, right? And the last ratio relates to proprietary ratio, basically, which is proprietary funds, right? Proprietary funds are basically indicated by your shareholders funds, right? That divided by your total assets. Right, so shareholder fund we already calculated here, it was 60,000, and our total assets are already given here, which is the balance sheet total also, which is 1,20,000. Okay, so my proprietary funds become 50% or 0.5. Right, so these were the first 4 questions of 2 marks each that had come based on this data. There was a similar question with 4 ratios that had to be calculated based on information given in the trading and profit and loss statement of a company. So we were provided with the profit and loss statement of a company, and then we had to calculate these. So Manpreet, sorry, yes, you are correct. The lot of your answers, yes, that is all right. So great. And Parmesh, for your first question related to current assets, 1.42 or approximately 1.43 is correct. So yes, very good. As you can see, the paper is not really very difficult, very expected type paper. Some numericals, we keep saying in finance paper you can expect some conceptual questions related to the various different wide syllabus that they have given. With a lot of importance in this paper had been on two major subparts, one being costing, which is part of your managerial accounting overall, and the second aspect was auditing. We'll go forward and see how that was covered. Okay, so let's calculate these ratios, and ratios is a very important part that also we keep stating again and again, and these are not difficult to calculate, but one should be able to be in a habit of solving, looking at the data and being able to take clues from that. Okay, so gross profit ratio is basically your gross profit divided by your sales. Okay, so here my gross profit is 2 lakh and that divided by my sales of 5 lakh. So very simple question, 40% was my gross profit. Okay, next question related to my operating ratio. Okay, now what is this operating ratio? Because some people have got confused in this and actually ended up calculating the operating profit ratio. So operating profit ratio and operating ratio are opposite to each other, or they both of them add up to become one. Okay, so 1 minus operating profit ratio will give you operating ratio. So operating ratio is basically all the different expenses related to the cost of goods sold plus your operational expenses. So when you take all these expenses and then divide that by what? You will divide that by what? You divide that by sales. So when we are calculating different ratios from the profit and loss, our base is usually the sales, right? So here my cost of goods sold. Now cost of goods sold is basically including the raw material that I have consumed and the expenses, direct expenses related to it, right? So that will include my opening stock, which is this opening stock, plus the purchases, because whatever purchases I have made, and less my closing stock, closing stock of inventory, which is this, right? Why we are reducing that? We are reducing that because this is not what I have consumed. In my cost of goods sold, I am trying to calculate what I have consumed. So this gives me the raw material consumption, right? So once I get that, in that then I will add my carriage and freight, because that is my direct expense, and my wages, which is my direct labor. So this will give me the cost of goods sold, right? So this is approximately 3 lakh, if you will calculate. And then I have my operating expense. Now what are my operating expense? There are two things that will be included in my operating expense. One will be my administrative expenses, this, and the other will be my selling and distribution expenses. So these two, 1 lakh 1,000 and 12,000, these will add up to be my OPEX expenses, which will be 1 lakh 13,000. Okay, so that becomes my total, right? So 3 lakhs plus 1 lakh 13,000, so 4 lakh 13,000 becomes my total. This now I have to divide by my sales, as I mentioned, right? This is all a part of your 5 lakh as a percentage of sales, and this gives me approximately 82.6%. So this is how I had to solve this particular question. So operating ratio, actually the confusion that some students have had in this question was only related to, many of them actually calculated the operating profit ratio, and that was also given in the option, and therefore they ended up doing it incorrectly. Okay, so we have to be careful in that aspect that this is different. So operating profit ratio is called operating profit ratio. Operating ratio is basically your ratio of how much you have made the expenditure, not just in operating expense but also in the cost of the goods sold. So Manpreet, it is not 80.26, it is 82.6 is the correct answer. Okay, next question is net profit. Net profit, very easy and direct question. You just had to divide net profit by sales, and we already had that calculated amount. So 84,000 divided by 5 lakh. Very simple. And yes, Manpreet, that is correct. The correct answer is 16.8%. Okay, so very simple question this was. Only we had to be able to look at the data and understand what information is given. Now it is the stock turnover. Okay, the stock turnover ratio is calculated as your cost of goods sold divided by your average stock. Okay, so cost of goods sold we already calculated here, it was 3 lakh, right? And what is my average stock? My average stock is basically the stock that on an average I hold, right? So this is calculated as an average of my opening stock and my closing stock. So the average of 76,250 and 98,500 is what I had to take, which is 87,375, right? So when I solve for this, the answer is approximately 3.43 times, right? So that is my stock turnover, which essentially means that on an average my stock remains with me for there in a year. Basically there are 3.4 times that my stock remains or my sales are done, right? So there's a 3 cycles, 3.43 times cycles are rotated in 1 year to achieve sales. So that is, and that helps a company to decide what level of inventory they need to maintain if they are targeting certain amount of sales, right? So that is there in these questions. So there were 8 questions overall from the ratios in chunks of 4 and 4 questions in how they had been given. Now the next 4 questions were based on Nidhi companies. Okay, so this question they had asked about Nidhi companies. So Nidhi companies are basically NBFCs. They are type of non-banking financial companies. However, they are governed by the rules of Nidhi Company Rules 2014. Okay, so these are the companies that are there, and basically they encourage thrift savings. What we mean by thrift savings is small amount of savings within their members, right? So these companies have to be registered as under the Companies Act as public companies to be carrying on this kind of association, right? So there are certain rules, as I mentioned. Nidhi rules are there which they have to follow, and a 4 set of questions had come based on this, right? So first question was, which of the statements are correct? So first statement was Nidhi companies can borrow from and lend to its members only. Second was Nidhi companies follow the Nidhi rules 2014 issued by RBI, and the third statement was Nidhi companies are registered with RBI as NBFCs, and we had to tell which of these are correct. Okay, so the correct answer here, so Manpreet, they are not really chit funds. Chit funds are separate. That is different from a Nidhi company. Chit funds are set up as a fund. Nidhi companies are set up as public companies. Okay, so they are little different. The answer is only A is correct. That means Nidhi companies, yes, whoever are member, they can borrow from this fund, and they can also use to save. So people who are saving, they are the members, and the money that is there is only being used to lend to the members only and not for outside lending, because the main objective is to save, habit of thrift and saving, small savings you do, and whenever required you can borrow from this fund only for your requirement. So that is the thought process behind a Nidhi company. So the first statement is correct. Second statement, I was telling you Nidhi rules 2014 govern them. So then why is this incorrect? This is correct. However, these rules are not given by RBI. These are given by the central government, another the Ministry of Corporate Affairs. So the government Nidhi companies per se fall under the domain of the Ministry of Corporate Affairs. RBI may give certain guidelines, because at the end of the day there's some aspect of lending and borrowing happening here, and they are actually a NBFC, and overall mostly the gamut of NBFCs falls under the RBI. However, as I stated, this is not there. This falls under the domain of Ministry of Corporate Affairs, and these are not, therefore not necessary to be registered with RBI as an NBFC. So they do not require a license from RBI to be registered as an NBFC, right? So that is there. So there are different types of NBFCs. There are only few that don't need to be registered with RBI because they are regulated by someone else. For example, Nidhi companies. There are other, for example, merchant banks or brokers which get registered with SEBI and not with RBI. Okay, another question related to Nidhi company only were, what is the minimum number of members that are required to incorporate a Nidhi company? Now, if we knew one fact, then maybe we would have been able to guess this answer. So I have been telling you that Nidhi company has to be incorporated as a public company, right? So if you, in case you know the rules of public company, a public company needs to have minimum 7 members. Okay, so minimum of 7 members are required in a public company also. So here also it is minimum of 7 members that are required, and out of this at least 3 should be the directors of the Nidhi company. So that is the rule. Okay, so answer is D. The next question was, what is the minimum paid up share capital with which a Nidhi company can register? The correct answer here is 5 lakh. So they need to register with a minimum, it can be more than this, but minimum 5 lakh honi chahiye. And there is another rule that after 1 year of incorporation, okay, after 1 year of incorporation, this minimum paid up capital should have gone up from 5 lakh to 10 lakh. Right. So in case the question is after 1 year how much should be, in that case it is 10 lakh. And recently in April, the government has come out with strict submissions and declarations related to this aspect. So Manpreet, 7 is correct. So public company, I think you are answering that maximum there is no limit. So in public company that is correct. In Nidhi company, it is not specifically mentioned that, but yes, they do need to reach a certain number of members in 1 year, and that is 200 members. So within 1 year of incorporation, they should reach 200 members. So that is another important fact associated with Nidhi companies. Okay, so another question that had come was, within 1 year of incorporation, what should be the ratio of net owned funds, which is the net worth of the Nidhi company, to the deposits? Because in Nidhi companies, what is happening? People are depositing money, saving their money, and that is being used for lending. So what should be the ratio of the net worth to the deposit base, right? So that correct answer is 1:20. D, 1:20, right? So your net worth should be at least 1 time if your deposit base is 20. Okay, so that is there, at least 5% basically indirectly we are saying. The next para was something based on audit. Okay, so there were 4 questions based on audit. Generic para was given and there were 4 questions. First question was that when we are auditing, to an extent that we are evaluating all the financial records to derive an evidence which can be used in a court of law or any legal proceeding, then this type of audit is known as what? Okay, so this question was there. Okay, so that is there. D, I think PSB. I think you were answering for the previous question. Yeah, that is correct. For this 13 question, if you can also keep writing the question number in chat, it will be great, for which you are mentioning the option, right? So yes, the correct answer, Manpreet, that is correct. It is forensic. Forensic is correct. PSP, for this question, the answer is forensic audit and not investigation, right? So it is the type of audit that was being talked about. So that is forensic audit. Okay. Next question was that dash refers to the attitude that includes a questioning mind and a critical assessment of audit evidence. So independent auditors need to follow certain guidelines which are given under the standards of auditing 200. So your standards of auditing of 200 mentions certain characteristics which independent auditors should maintain so as to be able to do a good audit job, right? So one of those includes that an auditor should always have a questioning mind, and they should be able to critically assess the evidence that have been provided for the auditing purpose. So what is that characteristic or quality or feature known as? The correct answer is B, professional skepticism. What that means is that you should be able to question. You should always be in a thinking mode. You should question and try to see whether there is any possibility of this being incorrectly presented. Is it making sense or not? So वो ना आप में डाउट होना चाहिए. डाउट का ये मतलब नहीं कि आप शक कर रहे हैं हर चीज़ पे, लेकिन वो क्यूरियोसिटी शक करने की एंड उसके एंड तक जाने की, उसको अच्छे से फाइंड करने की, that quality should be there. So that is known as professional skepticism. Next is, which term is used to also indicate a full range of frauds that are committed by business and government professionals. So when professionals are doing sophisticated type of frauds, undertaking for their personal benefit or materialistic gains, like embezzlement of funds happening and all. So the term that is used, what it is known as, the correct answer is B, white collar crime. Last question that was associated with this audit para was, what refers to the information that is collected by an auditor to ascertain the accuracy and compliance of a company's financial statements? The correct answer here is audit evidence. So that is the terminology that is used, which basically helps to, against this, the auditor checks whether the financial statements are giving a true and fair picture of the financial position of the company or not. Okay, the last para came as a surprise for a lot of students last year. However, they were able to score very well because this was one of the very basic business studies chapter or management concept that was discussed here. So majority of the students of our course, although this was an unexpected aspect of management coming in the finance paper, but majority of our students were able to do is because of the lot of preparation of various other exams like RBI, SEBI that they have been doing and associated with us, and the various YouTube videos they had been following on our channel that had actually widened their understanding and knowledge about many subjects that keep happening, right? So this is something that I keep telling students also, that at iExamB, yes, we are helping you prepare for exams. We are also helping you prepare for various other opportunities that come in the future. So try to get the right knowledge, try to benefit from the various discussions that we keep doing and we keep bringing out even on YouTube. Okay, this adds to your knowledge base, which ultimately brings out your own potential, right? So this was a very easy question, and majority of our students were able to do this. They had given a para which was describing about motivation and various needs that humans have, and then based on that they had asked which theory are we talking about. Okay, so it's a very, very famous and one of the first theories that anybody studies when we talk about motivation in general. Okay, so this is the Maslow's hierarchy of needs. This is a pyramid shape hierarchy where Maslow explained that there are 5 major category of needs that any human has, and we move from the base towards the top. So we first try to fulfill our physiological needs, which are the basic needs of food, shelter, right? So roti kapra makan जैसी जो needs होती हैं survival के लिए, first we try to fulfill that. Once we have fulfilled those, then we move to and we are concerned about our security, our safety. After that comes our social needs, right? The need to be a part of group, to be loved, to belong, to be able to associate, to make connection with people. And then our self-esteem needs, which are our ego needs, that satisfy our own egos, our confidence levels, and all. And then self-actualization needs, which are the highest level of needs in the terms that gives us a final satisfaction in terms of we are being creative, we are experienced, we are recognized, we are unfolding our inner potential, and we have a feeling of fulfillment with what we are doing. So that is how a person's journey moves towards, and that is what motivates to anybody from one level to the other. So this is one of the very basic motivations concepts that were there given by Maslow. Next in this they had asked which is the lowest level need. So I have already discussed here, so now it will be easy for you to answer this. The lowest level needs are basically our physiological needs. Okay, so this. Then what is the highest level need? So once if you had recognized the theory, then all the 4 questions would have been a cakewalk, right? So the only difficult part was recognizing the theory that was being talked about in the para, right? So the highest level is your D, self-actualization needs. And the final question was, in which shape is this theory presented? So now you know it, I have already shown it to you. It is the pyramid shape in which this theory is presented. So these were the 20 questions of 2 markers and 10 questions of 1 marker, total 30 objective questions that had come last year for NABARD Finance. I am sure after seeing this, you are not scared about the preparation. Yes, the syllabus looks huge, but it is indicative. It is showing that the various things you would have studied under any of the eligibility qualifications that have been mentioned, whether it is BBA, whether it is BMS, whether it is MBA in finance, whether it is CFA or CA or ICWA, cost accountancy, any of this you would have studied, and it is more about being able to now remember and use that. Okay, so you don't have to get scared at all. NABARD Finance will be very easy to prepare. Now descriptive part, there were 6 questions as I mentioned. The first questions was very simple direct questions. So if you have some understanding, you would have been able to write these answers, and some of the questions were in a manner which were more like your essay, English essay topics. So even if you're not really studied those proper topics, you would have still been able to write the answer. So question 1 was the difference between financial accounting and cost accounting. So financial accounting is basically making the accounts, financial statements, and then being able to analyze those. Cost accounting is determining and ascertaining the cost related to certain products or service which the company is providing, and the various elements that go into that, right? So that's the basic difference, and of course this could be elaborated on different parameters. Then the significance of communication in business domain. A similar kind of question actually came in RBI Grade B exam also. So communication overall, communication, managerial roles, right? Decision making. These are some of the things which, as managers, which I keep repeating in a lot of my classes for the paid users, and also in a lot of my lessons or sessions that I hold related to management, that these are the skills that will take you a long way as managers, as officers in regulatory bodies. So these are the skills that you should not just study for the sake of exam, but actually learn to inculcate them in your habit. They will take you a very long way in your career, wherever you make your career, right? So always understand these topics, communication and leadership, and if questions are coming in finance paper related to these, you should aim to score very, very high in these, right? So those were the questions there in descriptive paper, and the 15 marker questions had a write a detailed note on environmental audit. Another question was differentiate between marketing and sales. And the last question was about what do you understand the brick and mortar model, and how is e-commerce complementary or adversary to brick and mortar model. So this, I think, last year after the COVID times, the a lot of e-commerce overall has also come up a lot, and there were thoughts about they hurting the brick and mortar model of doing business. So one kind of a case study type of or business study type of a question they had given last year. So this was there in our course. We also provide you a lot of questions, mock test, which is prepared in the same exact pattern. You first have your objective part, then the descriptive part. For the objective, of course, we give you the answers. For descriptive also, we give you sample answers. We also keep holding classes for discussing various type of descriptive questions. So this is what we did for last year. Of course, this will be updated and being updated for the current year. This all will come into hand for your phase 2. If you want to know the cutoff that went for phase 2 last year, the last year total cutoff for finance was 113.33. This. And if you want to understand the breakup for the general English paper, out of 100, the cutoff was 50 for the unreserved category, and for your objective paper it was 17.5 out of 50 and another 17.5 out of 50. So for your objective and for your descriptive part, so that was the cutoff. Before this, in 2020 also, NABARD finance vacancies had come. You will find video and past year papers for 2020 also on our website. However, in 2020, the only difference was that time it was 100% objective paper. Okay, so I had done an analysis of this 2020 paper also. I will give you the link of that session also in the description box. So if you want to see the type of questions and topics that had come in 2020, you can refer to that also. You can also go on our website to attempt and see the paper. And for today's session, all these questions, the PDF you can download from our description box after this session. The course, if you want to enroll in the finance, it is currently available at a flat 50% off by using the code NAB50, NAB50. The people behind the course that will be instrumental in your preparation for both phase 1 and phase 2 include Karan sir for quant, Arunima ma'am and Satakshi ma'am for English, Anshul sir for reasoning, Jayanti ma'am for computer awareness, myself Prachi for decision making, Amit sir for GA, Sushil Ragde sir for ESI, Kailash sir for ARD, for finance myself Prachi Agarwal, Neha Arora ma'am and Shikha ma'am, and for your descriptive English or general English descriptive paper, Dr. Sharma and Arunima Sinha ma'am. So you will get the guidance, holistic guidance for your entire paper. Last year was the first batch that we had for NABARD Finance, and a very, very good result we had. So thanks everybody for joining in. Hope this session was helpful. You can download, as I mentioned, the PDF from the description box, and also get the link for the previous discussion, 2020 paper discussion, in the description. Thanks again, and wishing you all the best. Hope you have already filled the paper for or application for NABARD Grade A this year. Don't forget to subscribe to the channel also and press the bell icon.